Hey guys, this is Andrew Keen from KeenOnTheMarket.com. We offer a live equity option trading room. Bread and butter products is unusual option activity and earnings. This week, traded 8 earnings trades. 4 trades were winners, 4 trades were losers, but it netted out to a 40% profit. How is that be? How is that possible? How is that be? Let's go over every single earnings trade and how I looked at these trades. So 8 earnings trades this week. So I had 8 earnings trades this week that I put on. I'm not going to include the ones that I didn't get filled on, which were winners as well, which was Pepsi, Google, and I think another 1 or 2. But let's just review every trade that I personally took on with my own money, my capital this week. Trade number 1, and this is starting from the first day, is I bought Johnson & Johnson, May, April, 85 call calendar for 41 cents, okay? I'm just going to make this easy, and I'm going to say I risked $1,000 per trade, okay? Let's make it $500. Let's say I risked $500 per trade, okay? I want to know my reward on every trade. If I risk $500 across the board on every trade, if I held these till today, if I held this right until now, where are they worth currently right this second, okay? So Johnson & Johnson, I bought the May-April 85 call spread. I paid 41 cents. If I was risking $500, I would have been able to buy, so I just do 500 divided by 41. It would have been a 12 lot, so I would have been able to do 12 of them. Currently, it's worth 75 cents, okay? It's worth 75 cents currently. So if I risked $500 on that trade, I would have made 34 cents times 12, which is $408 profit. So I would have made $408 profit on this trade. Okay, I'm saying if I took every single trade with an even $500 across the board, every single one of these trades I took with my own money. Okay, and if I held them until right now, where are they worth right now? So Johnson & Johnson, a winner. Okay, good start. Number 2, I bought KO May 40.5, 41.5 bull call spread for 34 cents. My risk on this trade, $34 per one lot. So I take 500 divided by 34. I would have been able to buy a 15 lot. Currently, right now, it's worth $1. Okay, so it's worth $1. So my profit on this trade would have been 66 cents times 15, which would have been profits of $990. So profits of $990 so far. Oh, 2 trades. They look great so far. Well, don't worry, guys. There'll be some losers in here. Okay, trade number 3, Yahoo. So what I do in Yahoo, I bought Yahoo April 24, 25, 26 call butterfly for 22 cents. If I was risking $500 on this trade, very simple, 500 divided by 22, and I could have bought a 23 lot, okay? Right now, it is currently worth 0, nilch, nothing, okay? It currently is worth 0. So how much would I have lost on this trade? Very easily. I would have lost what I paid for it, $500. So the most I can ever lose is my risk, okay? Every single trade setup I have in equity options has a risk versus reward component. I want to know what I'm willing to risk on every single trade. Next trade, number 4. I bought Intel, May 21 put, May 22 call versus April Strangle swap. Okay, and on the Strangle swap, I bought it for 39 cents. 39 cents. The most I could possibly lose on this trade is 500 bucks. So 500 divided by 39 is a 13 lot. So the most I can lose is $500 per trade, okay? So I could have done a 13 lot. Currently, right now, it is worth 50 cents, okay? It's worth 50 cents. So I would make 11 cents on a 13 lot. So this would have been profits of about, well, 13 times 11. Oops. $143. $143 on this trade. So Intel, number 4. Number 5, 4 earnings. I bought eBay. Thank you, eBay. This is going to pay for a bunch of losers. 52.5, 52.5, 50. Put butterfly for 41 cents. Okay? 41 cents, once again, is a 12 lot. Currently, this is worth $2.30. Hello, eBay. Thank you for the profits, eBay. It was nice playing. Okay? $2.30, so I would have been profitable $1.90. $1.90 times 12 is $2,280 here. Don't worry, it's going to make up for some losses we're going to have in a second here. Okay? $2,280. If I risk $500 on eBay, I would have been profitable over $2,200 on eBay. Okay? On just a 12 lot, risking $500. My profits would have been $2,200. Okay, trade number 6, and here comes some losers across the board. But remember, only risking $500 per trade, so that's the most I can lose. I bought the SanDisk, April 57.5, 60, 62.5, call, butterfly, okay, and I bought this for 22 cents. Oh no, 41 cents. Same thing. I could do a 12 lot of these. 12 lot, okay. If I did a 12 lot, I would have lost the most I could have lost on any trade, which is $500. So I would have lost $500 on this trade. Trade number 7, another loser. I bought IBM, April, 205, 200, 195. Put butterfly for 66 cents. If I did it for 66 cents, that would have probably been like an 8 lot. So 8 of these. So this is worthless. This is worthless. Okay. And IBM, I thought I was going to make some more money in. So I lose $500 here. Okay. So another $500 loser. This is why I like put and call butterflies so much. So this is another $500 loser right now. Okay. Let's go to the next trade. Trade number 8. Long, McDonald's, May, April, 105 call calendar. And I did this for 65 cents. Oops, 55, 65, not 76. Okay, I did this for 65 cents. On this trade, if I did it for 65 cents, I could have done a 9 lot. Currently, right now in my McDonald's, it's worth 20 cents. So I would have lost 45 cents times 9, which is about $405. So I would have lost $405 on this trade. So as we look here, how many winners do we have? Johnson & Johnson, Intel, eBay, and Coke. How many losers do we have? Well, very easy. McDonald's, IBM, SanDisk, and Yahoo. 4 winners, 4 losers, right? Now, let's do the percentage on this trade. My profits would have been profits of 38.21. Okay, so profits of 38.21. Losses of a little less than $2 grand, 1905. So 38.21 minus 1905, $1,960 profit. So if risked $500 a trade, or $4 grand total, I would add profits of 1916. So a 47% profit on these earnings trades this week. Okay? So 48% profits. So this week, going over every single trade for earnings. So this does not take into consideration trades that I was working the order and never got filled. Okay? Those consist of CMG. I was working a bid on call spreads. That would have been a huge winner. Google, I was working condors. That would have been a winner. So I was working other orders and I didn't get filled. This is only trades that I executed this week. Okay, so I executed all these trades. Okay, I executed every single one of these trades. If I risked only $500 per trade, okay, if I only risked $500 per trade, I would have risked $4,000 total all week, total risk. If every stock blew out against me, if every stock went against me, I would have lost $4,000 total. I would have been profitable of $1,900. And if you just take 1,900 divided by 4,000, 48% profit. So this is every trade I took on. Does anybody have any questions about any of these trades? Does anybody have any questions about any of these trades? Does anybody have any questions? Yes, a strangle swap in Intel. So I wanted to take advantage of the April volatility being higher. I thought Intel wouldn't move very much, and it didn't move that much. But I wasn't too profitable on this trade. So in Intel, I bought May 21 puts. I bought May 22 calls. I sold April 21 puts, and I sold April 22 calls. So I bought a strangle in May, and I sold a strangle in April, thinking that the April is going to collapse. The volatility is April going to collapse, and I'll be long May. And I'll go over this in a second on managing trades on expiration. Managing trades on expiration. It is definitely way different than Iron Condor. The question is, I'll go over Intel in a little bit more detail. Similar strategies you saw in Iron Condor? No, I will go over Intel in a little bit more depth in a second. I am still in Intel currently right now. I'm still in Intel right now. I'm trying to get out of it for 51 cents, I think. And then another question, does margin come into a factor? I trade on portfolio margin, so to be honest, I don't really look at margin all that much. But, you know, every single one of these trades, there's no blowout. I'm not selling calls or puts naked. I never sell calls or puts naked because that's blowout risk. So every single one of these trades, my broker should let me execute these, is what I'm trying to say. I will save this slide, and we're going to put this video on the website. And then I'll go over managing. I'll go over the Intel a little bit more in depth as well. Thanks, guys. This is Andrew Keen from KeenOnTheMarket.com. These are the 8 trades for earnings. 4 winners, 4 losers. If I risk $500 per trade, that would be $4,000 total. I would be up $2,000 in profits, or 48%. This is every trade I've executed real time with my real money. If you want to get into the live trading room, you can shoot me an email, Andrew@KeenOnTheMarket.com. Thanks, guys. And I'll see you in the live trading room soon.